One.
A wise man once said, that would be me, that the market has propensity to close on the highs or lows for the week. I don't think that's going to happen this week. We're way off the low and we're well off the high. We're just going to have to battle it out. We got some earnings to cover. Let's get to the bank earnings. We got Boeing news, Dollar General news. This is a busy day on Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, let's get it started, traders and investors. We're basically flat here, down a couple handles at 78.50. Nice 30-point overnight range. Buck is down just a few pennies, 106.35. Man, these bonds, they can't make up their mind. Get crushed yesterday, rebounding back today, up over 1.5 points at 113. Same with the crude oil market. Unrest in the Middle East. Crude back up 349 at 86.43. Gold soaring over 1900 at up 28.30, 1911.20. Silver participating much more on a percentage basis. That's up 57 cents at 22.52. And Bitcoin's just kind of sitting this week out. It's up $90, 26,845. I'm going to bring in Dennis here, and Dennis gave us a little lecture in the pre-market show about relationships. And man, there's one thing about relationships in this market, and it's they're constantly changing. Right, Dennis?
Yeah, you've got to understand what is driving the bus. You know, when I wake up in the morning, I always like, what is the driver for the day? What is the first thing that's going to move stocks? Because if you can wake up and identify the driver faster than everyone else, you make money as a day trader. It's as simply as that. Driver of the day is TLT. Driver of the day is oil. So, which is interesting because oil, you know, stocks want to be inversely correlated with oil. But wait, stocks want to be positively correlated with the TLT. What does that equal today when oil is up substantially and the TLT is up substantially? A mixed bag. But let's break it down and separate just a little bit further because the Magnificent Seven don't seem to care too much about the TLT because the Magnificent Seven doesn't have a lot of debt. So what is really likely to rally today are the companies that have a lot of debt if the TLT can hold its gains. Right now, TLT getting most of its losses back from yesterday. I'd start thinking more value names as day trades. Day trade hat on here right now. IWM holding up a little bit better, but the separation really isn't there yet. If TLT continues to hold up, I would expect IWM to hold up better relative to the S&P because there's a lot more of those lower PE, diversified, non-Magnificent Seven names in there. And then you think about the gold rally too. And gold, no doubt, is positively correlated with the TLT. We've given that argument before. The yield on gold is zero. They don't want to see rates continue to go up because nobody wants to own gold in a high rate environment. They want to see rates go lower. So there's no doubt when the TLT rallies, that gold is likely to rally too. And you can clearly see the positive correlation between gold and TLT. Chart those two things up. Besides yesterday, which obviously gold did not sell off much yesterday, was down but held. I do think that gold is rallying today a lot. There's other news too, but a lot of it TLT related as well.
And just, looking at the bonds and that, I could just pull up the TLT. That move yesterday, that 1 o'clock just destruction, brought it back. We are rallying back. So, we do the pre-market show, right? And we let you go at 9 o'clock. But, at 10 o'clock, you do get to Michigan, the University of Michigan Consumer Sentiment Survey. So if you're looking for a tape bomb or something to move the market, have your heads on a pivot at 10 o'clock. So we can chop and slop till then, but we'll see what that consumer sentiment survey is. On a day like this, we got to bring in Mitch. And Mitch, we got so much news to cover here. Where would you like to start?
Let's start in the aviation sector as Boeing and Spirit Aerosystems are expanding inspections of their 737 MAX 8 aircraft production due to ongoing defects. Although these issues have resulted in delivery delays for the 737 MAX 8, the FAA assures that there's no immediate safety concerns. This situation comes after Boeing announced plans to increase production by mid 2025, reflecting growing orders and its recovery from the 737 MAX crisis. What will this do? I mean, it's already been beaten up. It could be even beaten further down here.
It just doesn't go away. These problems don't seem to go away. I mean, Spirit Aerosystems has been the worst of them, obviously, making the parts. They hit that one harder. I mean, this was $32 or $35 when these problems started. The stock has been halved since, basically 2 months ago. Boeing, yeah, like you think eventually, you got a lower PE name here too, but the debt trade doesn't help Boeing either. I mean, it's just saddled and loaded with debt. We're gonna continue to go to this, folks. We don't normally. You're just new to this show. We're not big fundamental traders. We don't sit here and analyze all the fundies of everything. But right now, that's what's driving the bus is rates. So you've got to understand the first thing I do when I'm looking at a stock, I'm gonna buy it or not. I want to see the debt load. Boeing, I just know it's loaded with debt. It's for $47 billion in debt on a $115 billion market cap. It's a serious issue, the debt here. So again, TLT rallying today would be good news for Boeing. So if we didn't have this Spirit Aerosystem stuff happening, I'd expect Boeing to maybe show some relative strength, but now you get more problems. So even on a good day for potential that hasn't happened yet, a potential good day for some of those debt-laden companies, Boeing not participating because of SPR.
I'll just go real quick. You see Boeing in the red. If you're looking through follow through the pre-market low, your next daily low comes into the 85.68. So I'd be aware of that. SPR. I mean, I'm trying to find support in this thing, and that sometimes is a little bit more difficult to do. This September low was very important. That's a ways away. That's at 1465. Man, I'm not really seeing anything in the 16 handle to get me excited. There were a pair of lows at 16 on October 4th and October 5th. But, once again, stocks in a downtrend with bad news. I mean, and high debt. I mean, maybe you need to look to other places.
There's a lot of risk. We do have a low 182.55. Like I said, TLT rallying today, which we'll get back into in a second, because that should be good news for a number of stocks. I mean, you come in here today, Magnificent 7 just skews this buy. You can't even look at it because it's a useless indicator with Magnificent 7 just going opposite direction to so many stocks that are out there lately. But, and that's getting hit. But when you look here, I'm looking at, a broader market here. Oil up substantially. All your oil stocks are up. Banks are all up, which we're going to get to on those earnings. We're seeing stocks, defense stocks are rallying here more. We're Lockheed Martin, General Dynamics, etc. Consumer staples are holding up fairly well. Most of that is because of the TLT movement. Utilities are holding up fairly well. Most of that because of the TLT movement. Airlines are getting whacked, but that's because of oil. We know the inverse correlation there. I mean, it's all about relationships right now here, folks. It's all that matters. Is so many intricate relationships, and so many people just don't respect it. I mean, how often do you see somebody come on CNBC and talk about relationships? Not that often. So this is why there's an edge in it. This is why I've traded relationships for 23 years. People want to say, every other person comes on CNBC and talks about a chart, but not that many people talk about relationships. That's why the edge remains. So if you can understand the relationships, you will make money in this business. So clearly relationships driving the bus here today, with airlines down, oil up, some of the, the higher debt names holding up fairly well today. And that's because of the TLT gold rallying today. So lots of balls juggling here. Understand those relationships.
Let's get to some bank earnings. Let's go to JPM. Moving on to the banking industry, JPM Chase reported Q3 earnings per share of $4.33, sales of $40.69 billion, beating the expectations. However, the bank did acknowledge that it was over-earning on net interest income and noted that credit costs could normalize over time.
Joel, jump in here.
Yeah, I own it. I've owned it since that banking crisis. I'm looking at the pre-market action in the pop. I'm just going to give you one number, a swing number for the day. That's 147. that surrounds the last three highs. If we hold 147, you got to bid, maybe work your way up a little bit higher into the 148 handle. On the downside here, ahead of earnings, people were really squaring off their positions in the lower 145. So pretty tame move here so far for JPMorgan.
I did want to add a little bit of a disaster comment. You know how they like to do it at JPM. Well, the
Sure.
disaster comment was, this may be the most dangerous time the world has seen in decades.
What?
That's what was
Is
given
that
on the
from
call.
Jamie Dimon? Who said that?
I don't, on the report that I had, they didn't have a name behind it. I'm pretty sure it came from
that's
Jamie,
a big
but
comment.
it came on the
What are they
comment
referring to?
in the call. And
Oh,
so
I think I could figure it out, Dennis.
Are they referring to like the rising debt rates? Are they referring to a lot of banks? And here's why I don't own
Yes.
banks again, being and I mean, again, just think about your mortgages. Think of everybody who's got a 2.5 or a 3% mortgage. Your bank is losing money on you every single month that you pay them 3%. They are losing money because they are borrowing higher than that right now. I mean, I guess the deposits, you know, so people aren't, but people are getting savvy to it. People are getting smarter too. I've talked about the Bank of Nova Scotia, you know, where I've got, you know, my mortgage on my rental property at 1.64%, and I'm actually got a GIC with the same bank at 5.2%. They are literally just printing me, what is that, 3.5% every single month, printing me 3.5% every single month for the next 16 months. Imagine having that for 25 years. So this is why the banks have a whole lot of problems. This is why the KRE cannot catch a bid. I mean, rates higher are supposed to be good for banks, but not when they're all locked up. So, and they're all locked up. And this is why we had 4 bank failures early in the year. This is why the banks continue to be sold on strength. This is why the IWM continues to be suppressed, which I own some of the IWM. You hope maybe we can get by some of these problems, but until rates start to rise, we're not past any of these problems. Is that what the gentleman or lady at JPMorgan is referring to with those comments? I'm assuming it might even be JP, or it might be Jamie Dimon.
The chat confirming for me there, Jamie Dimon was the one that said it. Yeah.
There's just
All
a lot
the
of risk. We
above.
got
All
war
the
going
above.
on. And
All the
Toronto,
above.
Dave, you're absolutely correct. Jamie Dimon is a doomsayer. He is. He is conservative. Jamie Dimon is the reason, because Jamie Dimon is risk adverse.
Yeah.
He's the reason that JPMorgan is best of breed. Because JPMorgan used to be aggressive. They used to loan more aggressively. But Jamie Dimon knows what to do. He knows how to control risk. This is why JPMorgan sits not too far from all-time highs when every other bank stock is destroyed.
Yeah.
He's smart. He's risk adverse. Now, is he going to be right, or is the end of the world coming here? I don't know. Nobody has a crystal ball here. Joel had to leave. But I think you've just got to take those comments with a grain of salt, because Toronto Dave is saying that he is very obviously conservative in everything that he says always.
I think it helps also JPM, of course, right? Having a conservative CEO, I think it's helped them.
For sure it has.
So.
You want your bank, especially in rougher times, to be conservative lenders, to be, you know, to look for, you know, where is the problems lie here. And this is what so many of the other banks just haven't done. And I mean, the regional banks are just a complete disaster. Like, you got to start looking here. And I was actually, before we get right into the, you know, the bank earnings here, you know, I was thinking when we get past this earnings season, maybe it's not a bad bet to actually buy some puts on some banks, because, you know, PAC-W, I think, Mitch, me and you have both said that I think the storm is coming for the regionals. And it's probably a reason not to own the IWM. But I think the storm is coming for the regionals. There was somebody on CNBC yesterday, Joel, and it was an analyst they had on. And they were saying how good, you know, the PFF looks, you know, like buying preferred stocks. Why not buy these preferred stocks of these banks? And I'm like, what are you thinking, man? Take the blinders off. PFF looks awesome at a 7.26% dividend. Everybody's backing up the truck. How can you go wrong at a 7.26% dividend? It's attractive, right? But the problem is we're in a 5.5% environment. And if we continue to remain in a 5.5% environment here, well, that 7.5% doesn't look good at all, 7.25. So you're telling me, and if you look at what's in the PFF, it's full of bank preferreds. It's all bank preferreds. Well, if you get some bank failures in there, those preferreds are going to have some major problems. So you are literally going out and picking up 1.5%. That's what you're picking up at best, 1.5% long term. And you're telling me that I should do that, pick up 1.5% and risk all these potential bank failures. I'd say the PFF sets up very poorly from a risk reward perspective. If you're in the PFF, I would sell it and I would move to cash because there's a lot better vehicles right now. And even like, and then people can say, well, you bought, preferred stock, Loblaws preferred. Loblaws is a grocery store. Loblaws is packed all the time in Canada. It's the biggest grocer in Canada. People are going to eat. So I would much rather own Loblaws preferred at 6.5% than PFF at 7.25% and have exposure to all these banks. Because you know what? You do. When you're buying the PFF, you are basically buying banks, not direct equity. But again, if the going gets tough and you're worried about bank failures, the PFF is not the place to be because the PFF will go down if we start to get bank failures.
So I shouldn't ask Jamie Dimon to come on the show.
Jamie Dimon would probably agree with me. He'd
Exactly.
probably agree with me. Bring him on here. He'd probably say, yes, Dennis, you're right. 1.25% is not enough. That's not enough reward. 3, 4, 5% I want to take on. When we were buying the PFF in a 1% environment was yielding 5.5%. I owned all kinds of preferred stocks back then. They were paying me 4.5% over the risk-free rate. Now they're only paying you 1.25% over the risk-free rate. Well, there's way better places to be. I'd rather be in like growthy tech stocks with no speed PEs than the PFF. And again, you're probably not going to lose on the PFF because we're maybe not going to have all these bank failures, but the risk there is incredible right now. I think Money Mitch would agree with me. There is a real risk that this bank did everybody just all of a sudden, sell their homes and move into 7% mortgages in the US? No.
What about the office real estate?
2.5 still.
The office real estate is what I'm concerned about because that still hasn't come back nowhere near. People are changing them to like apartments. That's just going to show you. And I think that this is just going to show you that also real estate has grown in asset value, right? These offices are more expensive today than they were before the pandemic. So they're not coming back to those offices, let alone the more expensive offices. So I think that you're going to see more and more trouble there. And the truth is,
I think people are. I agree with you that. I'm going to stop you guys here for a second because
us, please.
I think people are. Yeah, I think people are going back to offices. Not at the same rate. I'm not saying that.
I will short that call all day long.
Yeah, man.
They're going to go back more than they did during the pandemic.
Obviously, there were zero people in the office.
Yeah, that's a little.
Are we going back to where we were before the pandemic? Because there are analysts that come on CNBC and saying eventually we're all going back to the office.
No,
if it was if Elon Musk was running the world, we would all be working from the offices. The issue is Elon Musk is not running the world. If Elon Musk was running the world, it would be a lot different place. And you know what? Probably not a lot happier place for a lot of people because he's a workhorse and he would there's no 4-day work week coming at Tesla. I'll tell you that much. There's no 4-day work week coming at Tesla.
All right, let's go to Wells Fargo. Wells Fargo Q3, $1.48, beating the $1.24 estimate. Sales of $20.86 billion, beat the $20.11 billion estimate. Wells Fargo has been falling a lot more than kind of JPM. What do you guys think about this chart? And then I know the chat wants to just take a look at Bank of America. Maybe we can make some comments on it technically.
Yeah. Again, JPMorgan is best of breed. If I was going to own a bank, it would be JPMorgan because it is best of breed. Wells Fargo chart doesn't look great. None of the banks look good except JPMorgan. Goldman Sachs held up okay, but it doesn't look that great either. It's not a pure bank. What were the earnings, Mitch? Were they were obviously okay?
They beat. Yeah, they just beat. Nothing included there that really stands out, but definitely it included $349 million, which was 9 cents per share of a discrete tax benefit. So that kind of helped their EPS get a little bit higher, right? They beat the $1.24 estimate with a $1.48, but 9 cents of that came from that tax benefit.
Okay.
Dennis loves one number and one number only.
What are you giving me now?
41. You bumped up against it. You got to cut through the paper all the way through 40, 40 and a half. There's probably a boatload sitting at 41. Hit there in the pre-market to take out 41 to get a 41 bid, and the thing's off to the races. Just saying does not reach 41, or does the one 41.05 and then lock down again at 41, then you're going to have a potential down day here in Wells Fargo. Keep an eye on 41. And is Warren out of this? I can't remember. Someone asked that. I know he has the Bank of America. Did he get out of the? Do you guys know off the top of your head? If not, we can look it up in the back. We can have one
He
of
sold
our
a lot of the banks, but I'm not
assistants.
sure.
Yeah.
I'll take a look into it while we talk about the next stock here. Let's go BlackRock.
It just him not buying anything is such, Joel. I mean, such a concern. Is it not? Is it not?
I mean, you bought the home builders. I'm a little concerned about those, but we won't get into that conversation.
That is kind of interesting.
Let's go to BlackRock here. Q3 adjusted EPS $10.91 beats the $8.26 estimate. Revenues of $4.52 billion, matching the consensus. But for the first time in nearly 2 decades, clients are earning a real return on cash and can wait for more policy and market certainty before de-risking. That was said on the call. Now, if you take a look here, long-term quarterly net inflows were at $3 billion. Slowing down from 80 billion in inflows in Q2 and reflecting 49 billion of net outflows. This is not looking good here, at least from when I look underneath the hood. And then their asset managements also are falling here, 9.1 trillion from 9.43 trillion at the end of Q2.
Chart doesn't look great to me either.
No,
it's not one that I would own. 3.18% dividend isn't even attractive anymore either. There's just better places to be. I mean, we're talking banks, and you know what money, Mitch, and BlackRock's an asset manager, but we're talking financial companies overall here today. Every company that reported was basically a financial company except UNH. Mm-hmm. You know what money, Mitch, and me think of, financial companies right now. Me and Money Mitch are not in love with financial companies.
Yeah, no. Unless you're playing them on the short side.
Yeah, well, there is. It's 2 sides of the market. Good call.
Yeah, that's true.
I think I'm shorting pops on banks. I'm with you. BlackRock, not a bank, but removes with the banks.
Well, it's a $600 stock, so you know.
Does it want 600? That's what I think here.
Do technicals. Well, first things first. I'm going to give you one number because Dennis gets mad if I say more than one number.
Yes.
Lower the move. 523.60. 523.60. There was one low ahead of it, but I'll give you a zone. 624.25798, because that splits those 2 lows from August 3rd and August 4th.
Yeah, it seems to me like on the chart it wants 600. We'll see if it gets there.
Yeah, it's not pretty.
Citigroup Q3 EPS at $1.63 beats the $1.21 estimate. Citigroup Q3 sales of $20.14 billion beat the $19.32 billion estimate. They do see fiscal year 23 revenues at $78 billion to $79 billion, excluding 23 divestitures from related impacts. Citigroup, guys, what do you guys feel on Citigroup? Is this a little bit better?
Yeah, sure. The banks are relief popping on all of these earnings.
Citi loves to come in a little later too, and
look at Delta.
Usually do this.
Go look at Delta. Pretty good earnings. Was going fine.
That's true.
Serious downtrend, and turns around, does key reversal on earnings and closes down the day.
Yep.
Banks historically pop on their initial release and then historically usually give it back, but we're set up even for more than that, because we're in this environment. Now, again, with TLT rising today, maybe that helps to buck the trend. Maybe they can hold up, because I do believe that companies with a lot of debt, or companies that are very rate sensitive, are going to be stronger here today because the TLT is up. So that's what puts the wrench in the plans of just flat out shorting all the banks here. If TLT was down today, I would say I'm shorting all these bank pops. But TLT is having a day. And in full disclosure, I have the positions on TLT. I'm trading in and out of it. So, obviously, but it's having a day. It's getting back all of its losses from yesterday. And that's good news. And like I said, we get above 90 on the TLT, maybe start thinking about, some of these staples. Maybe start thinking about some of this stuff. Because some of this stuff's been killed, man. Killed. And I do believe we're getting closer to the top of the rate cycle, which will be good for a lot of these banks. It will be good for some of these companies. So I'm not just telling you here, oh my gosh, you got to sell all your Cokes and your Pepsis. Pepsi after yesterday, just a debacle. I mean, at a certain point in time, I'm not coming and buying banks because I think there's a lot of risk. But I think at a certain point in time, some of these consumer staples are going to be
What
buys.
happened to Pepsi? Oh, what happened the last 2 days? Was there news on Pepsi?
I think there
They had
was,
it-
Joel.
They had their wasn't it earnings? I think it was just a couple days ago.
Did they
No,
have
that was a
earnings?
couple days ago. It ran.
Yeah.
2 days ago, yeah. They
And
reported.
go ahead.
Good luck.
They reported 2 days ago. You hit the 165. I mean, I'm not sure. It was a gap up day, and I was thinking it was on the dailies. I'm like,
Yeah,
oh
they reported
man.
Tuesday.
Yeah. Let's go back to Citigroup. Run one number for Dennis, and that's going to be 43. Pre-market highs just under that. You have, if you look at your upper right chart, you had another high just above it. So up $1.17, pretty good volume. Plow through 43. TLT say strong. S&Ps go green. You could have a good day. I just would be one of those things. If you get a 43 bid, just make sure it goes 43.10 bid, 43.20 bid, and someone doesn't come and lock you down back at 43.
PNC Financial Services reported Q3 earnings per share of $3.60, but missed revenue estimates. The bank's net interest income was down 2% year over year. There was a provision for credit losses in the quarter. What do you guys feel about this PNC chart?
Same thing I feel about all these regional bank charts. Sitting here, hanging around, eventually waiting to go lower, I think.
They're waiting for bad news, at least, or maybe
Today,
good news,
today is okay as long as the TLT starts breaking down. Don't own the banks. Just have that up on your screen. Don't even worry about trading the TLT. Just have it up as your indicator. Have it up there. Today, banks may be okay for a little bit, anyways. But TLT starts to roll over. Don't be along the banks.
124, gotta like that on a rally. If it continues, that's not the well, first thing you gotta do is get to yesterday's high, so that's a little concerning. After that, you got 23.13, then 24. On the downside here, I don't like this under 122. Now, there is another daily low just a little bit below that, but after that, it really drops off to the 118.50 area. So let's see. Early action up 78 cents. Still a ways to travel to get the high from yesterday's session at 123.13.
Let's change tunes. UnitedHealth Group Q3 adjusted EPS $6.56, beat the $6.32 estimate. Sales of $92.36 billion, beat the $91.37 billion estimate. UnitedHealth expects fiscal year adjusted EPS of $24.85 to $25 versus the estimate of $24.84. Prior outlook was given at $24.70 to $25.
Defensive stock that everybody wants, but remember, a stock is a stock is a stock. This stock's back up near all-time highs. I'm not buying stocks near all-time highs.
Let's see. You got a gap and go here, up $8. Pre-market highs a ways away, so we'll stick with that as a potential target. You want to see it get to 536.55 and continue. That's your pre-market high. The dailies aren't giving me much. Your next monthly level comes in at that's a monthly high. That's 530.45. You're up here, folks. I don't selling. Encouraging more than buying or booking some profits. I really don't see an area. If you're looking for a decline, you're shorting this thing like Dan Back likes to do. Top of yesterday's range, potential support at 528.58.
Just to take a quick look at a relationship with this one, what about CVS? Because I've been seeing it just lag. It hasn't really moved in, like, I would say, like
CVS or like Humana? Wouldn't you put Humana
no
more in there?
CVS healthcare.
No, CVS is in there too.
It falls under healthcare plans, right?
Yeah, they have the drugstore, but they have healthcare plan. They have the Medicare stuff, so Medicaid.
So it's just been sleepy here. What do you guys see? At least just quick look on the chart. Like to bring up some relationships.
I mean, WBA had a day yesterday, not a bad day. Showing Life sold off, but then rallied and closed near the highs. I mean, is there a play for CVS here short term? Maybe. As a stock I'm investing in, probably not. I don't mind. I don't mind the dip really in CVS here at this point in time. Like, I don't mind this area as a trade, but below like 68, I wouldn't want to be in it.
But you had the gap fill, right? That big old gap fill when Blue Cross pulled out and went with Mark. What's his name? I can't even think of his name from Amazon. Mr. Big Shot. He's on the shows all the time. Come on, help me. Broadcom, Mark. How did I forget this? Guys, help me out. Mark Cuban.
Mark.
It had
Cuban,
where
come
with the
on.
God, you guys are useless.
Somebody
man.
we think
Why'd you
about
say
all the time.
Amazon? You should have
Dennis-
told me some Dallas or something. I would have got it real quick.
Dennis, watch your offers here. It's not a rip roaring rally, but it's like a creeper rally here. So
Yeah,
I don't
the
know.
import
And-
prices just came in, but the main reason is more stocks are starting to wake up to that. Hey, we got bonds having a day, man. Bonds
Look
are
at
having
gold.
a day.
Woo!
Yeah.
Up 42.20. Gold is ripping here. Also, keep an eye on
Gold
the gold
really
market.
ripping. Holy mackerel!
Dollar
When it gets
General.
back to 2,000, I'm selling it. You guys are hearing it here first. I'm sick of this gold position. I'm telling you, I'm selling when it gets to 2,000.
You're in gold.
I bet, yeah. what
He's
am I
always in gold,
here?
man. Come
Yeah,
on, Joel's in
I'm an
everything.
old
Does that
fart.
make money long run though?
No.
Like, because it don't pay any dividends or nothing. Like,
No.
I mean,
The
look at the
GL
long-term chart. Does anybody really make
No.
money in gold long run? Does it keep up with
Trading it.
inflation for the last 25 years?
No, it
Gold, I
probably doesn't
guess.
keep up with inflation. Now that's for
No.
sure.
Doesn't
That's
keep
the
up with
hard part,
inflation.
right? I mean,
I
Yeah.
never
Dollar-
own gold.
Let's
I
get
know.
to
They
Dollar
say,
General
Kramer says,
here.
"Oh, it's your hedge. You got to own 5% of it."
Yeah, I
pretty
know. I've
defensive.
been
Like,
hedged since
maybe 30 years ago when people actually cared about gold. I don't see people wear it anymore. I don't know. I'm not a fan of. I'm not a gold bug. Sorry,
either
Peter
am I.
Schiff.
I'm not
Definitely not
a
a gold
bug.
bug.
I'm just like an old fogey that invests in gold. So
Yeah,
that's what I
that's
am.
okay.
I
We
mean,
know
it's
that.
fine.
We
It's
know
such
Joel's an old fogey.
such a small percent of the
Okay.
portfolio.
Well,
that
I
it doesn't
look at the
even make a
gold
difference.
price just because I like looking at Gold Rush, the show, and I like to watch them dig for gold. But that's just me, you know. Let's keep going to
Sounds
Dollar
fun.
General. Oh, it's a good show. If you guys don't watch that, Joel, you ever seen that Gold Rush?
Gold
I gotta show it
Rush?
to you. I know the chat will know about it. Dollar General shares trading higher after the company
Dollar General.
updated financial guidance for fiscal year 23 and announced Todd Vasso as the appointed CEO. Dollar General's outlook fiscal year EPS at $7.10 to $7.60 versus a $7.73 estimate here. Also gave full year fiscal year EPS growth of 34%. It's negative 34% to negative 29%. Not what you want to be hearing, right?
I wanted to buy this stock. You all know I
though.
wanted to buy this stock. I thought I was going to go under 100. I thought, lots of things. But again, the debt has kept me away from this stock. And it's just a lot of debt. But good day. I mean, for it, it's having a day. Needs a new CEO because obviously, this current CEO hasn't done much good for it. Stock has just been destroyed. Margin's still getting, eaten up alive probably. Guidance was okay, not fantastic, but maybe better than what Wall Street thought. So that's the only reason I think you really get to pop up. Overhead supply all over the place though. So hard to really jump on board and say, yeah, this is the big rally. But remember, massively oversold stock. That's kind of the contrarian in me wanted to buy it just because it was so massively oversold.
I know.
So can massively oversold stocks rally more than $7? Sometimes.
It's funny because I keep on my quote monitor. I obviously keep all the major commodities and the big components of the S&P, and then I have another section for stocks from the show that we covered, and easier to pull up the charts. But I've been keeping DG at the bottom, just because it kind of got stuck there, and we talk about it, and I'm like wait for it to get to 100, and I saw it pop. All of a sudden it's up $8. I'm like, I wonder if they fired the CEO. And then you go to Pro, and they had it. This is a tough call. I like to see it get to the pre-market high. The pre-market high is 110.49. So, man, if you had been bottom fishing in the last 2 weeks, 3 weeks, you're either up money or even. So it's a gift. It's a gift rally. I think if you want to buy it long term, you could probably get it at lower prices. But that's what I'm looking at for Dollar General.
Let's get to our guest time. You guys out there, smash the like.
All right. We got Jonathan Corpina on, Senior Managing Partner at Meridian Equity Partners, New York equity trader.
There you go.
Jonathan, good
Gentlemen.
to have you back. How you doing?
I'm doing well. Thanks for having me. I know it's been I'm back. I'm ready to join your show and looking forward to many more interviews ahead.
Okay. All right. So over the years, you've heard us. I know you joined the show early today, and we kind of get opinionated, going one way or another in the markets, and we definitely have some strong opinions. What's going on now? From your big macro standpoint here, tell us what you're thinking
Yeah.
about the markets, interest rates, wherever you want to go first, Jonathan.
Yeah, listen, I'm pretty optimistic and try to find the silver linings of things, and it just seems like there's so many headwinds that are sitting on top of this market right now, right? So like, let's go geopolitical issues that we're dealing with right now. Those headlines continue to evolve. They're quite concerning. And I think if they're moving in it's moving in a direction where it's towards escalation and probably more involvement from supporting allies, right? And I think we're going to get pulled in a little more than we are at this point, and I think that's certainly going to have an effect on the markets. We look at interest rates, where interest rates are trading right now, clearly having an impact on housing prices and people's mentality of what they could have bought and got for interest rates 2 years ago versus where they are now. We all see those charts on the equivalent of a home at 500,000 at 3% versus one at 7%, and that impact that's there. So I think that's certainly more of a factor than we're playing into it. And I think Main Street investors are looking at that more and paying attention to that more, because originally we were thinking interest rates are going to spike and then come back down, and now we're all in the camp, both the professionals and Main Street are looking at this, that interest rates are staying where they are, and it's going to take quite some time for them to come back. So until everyone gets comfortable with that, I think that's going to add continual pressure on our markets. I think overall sentiment is just heavily down on our markets right now. Like, S&P traded down to 4,200. We're trying to rally back. We have a nice little bounce to it. It just doesn't seem like there's enough muscle that's really going to be behind this and get us to where I think people feel comfortable with our markets. You couple last year's returns with this year's so-so returns, it's just going to get us in this kind of murky area. And then just adding on to all of it, as every day goes by, we're getting closer and closer to 2024 election. That cycle, those headlines continue to play more and more into our markets. A lot of uncertainty that's going on there and jockeying for position and how that's going to play out. That clearly does have an impact both on our markets and overall investor sentiment. So as that date gets closer and closer, and I know we're 13 months away from that, but that's right around the corner. That's going to play an important role in our markets, because it might force investors to take a pause, move away as we get closer and closer to that date. So overall, I just think there's just too many negatives that are in front of this market that can really get us back to where we've seen before recently in the past 2 to 3 years, and it's gonna really need some sort of catalyst to get us up there.
Let's take the trader hat off just for a second, and I struggle having the trader hat on all the time. And just think though, when it's market sentiment has turned south, and prices, on a lot of stuff are sitting, like if you move away from the Magnificent Seven, it's been an epic disaster. IWM sitting near 52-week lows, lots of stocks making new 52-week lows. Consumer staples, utilities have been a complete mess. Rates are soaring high. Sometimes historically, isn't this the time to buy, Jonathan, if you got like a 10-year time horizon?
Yeah, absolutely. That's so funny because I have those conversations with people, and they ask me that question. I'm like, okay, well, are you a trader or are you an investor? Because if you're an investor, this is a perfect opportunity. You're not gonna pick the bottom, right? It's gonna be impossible to actually catch that wave. But if you look historically at prices and historically the way the market returns have been, it's during these lulls, and we're in this long-term lull, right? Where we after last year and coming through this year, it seemed like this year we were gonna get a rally, and we've sold off from that. RTY is flat on the year. So I think these are opportunities now when markets continue to build long-term bases over time where prices historically stay low. These are opportunities certainly to get back into that market if your investment horizon is for a longer term, right? And once again, we talk about 2024. I think 2024 is going to be choppy with the election cycle going up and the uncertainty that's surrounding that. So if you're able to wait that out and maybe not fully leg into positions, you buy a little, you wait a little, see where it goes, you buy a little more. If you're able to play that over an extended period of time, historically, these are the times to be buying the market.
What do you think about just the concentration here in the Magnificent Seven here, or Elite Eight, whatever you want to call it? I mean, you can hide out. They have the low debt and everything. I mean, you look at the IWM, that's getting ready to break down. I mean, we've seen over the years where there's a point where that where these stocks could just do the heavy lifting, but until you can get the rest of the more of the broad market, it's hard to get super optimistic. How are you on something like Apple, on the
Yeah.
Magnificent Seven?
Yeah, listen, I hold position, and they're ones that clearly keep a strong hold on a portfolio. The concept of rising tide lifts all boats. That tide's got to be really, really strong to bring up all those other components with it. And yes, these Magnificent Seven certainly have enough firepower behind them. They have enough cash on hand behind them to sustain any storm. It just seems like that concept works in a short period of time. Over a longer period of time, if the stocks components below it don't rise with it, I think the frustration level comes back rather quickly, and the appetite for risk comes off also rather quickly, which then puts pressure on that market there. But when you look at those stocks, there's certainly ones that you should have in your portfolio. You certainly can see the opportunities when the volatility. We sometimes see in those when you can start to pick off some lower prices. But for an overall portfolio, you need to have those components in there.
All right, Jonathan, I want to ask you a little bit about technology. Of course, year to date, we're up about 35.3%. Do you think this is as good as it gets for technology, or do you think there's a little bit more juice here?
I think this is as good as it gets, right? You see the over the calendar, the rotation, and tech becomes favorite when adversity seems to be around. I think with some of the geopolitical issues that we're seeing, globally, and the effects that can have on it, right? Go back to pre-COVID, the major headline that we were talking about was China tariffs, right? And that conversation still comes into play. It's going to continue to come in play when you have a geopolitical issue between China and Taiwan. That's going to have an impact there. So I think from a sector point of view, and considering what this market and economy has shown us so far this year, I think this is kind of where we're going to get to in that sector there. I don't think there's any other real strong components behind it that's going to be able to lift it any higher.
So if someone like one of your clients, your institutional clients, they calls you up and says, Jonathan, I want to start to build a position in X. I'm not talking about X, the stock, but what would be something that you just think it's just like a horrible idea? What would that be? Would that be some of the financials that would it be some of these staples in the beginning killed? Like what would you have your institutions avoid?
Yeah, I think there is risk in the financials now, right? I mean, we can all look at JPMorgan and Jamie Dimon. They're an animal within themselves, right? So as much as we'd like to use that as a barometer to what the financial sector is going to do, and maybe overall what the earnings season is going to do, as Alcoa used to be way back when, I think JPMorgan's in a world of its own. I think there's others that are going to struggle there. Look at the banking crisis that we've had over the last 12 months, and the failure of four big companies. There's more brewing that's out there, right? And I think that was a wake up call that gave some of the smaller banks an opportunity to kind of really look at what they're doing, how they're doing it, and seeing if they can take some risk off the table associated with that. I think if we continue to see interest rates move higher and we have pressure on our economy, not that we're in a recession or going into recession, but as we continue to talk about the R word, I think some of the smaller regional banks still have risks, still have exposure. That's just not rising to the surface just yet, and I think that's something that we're going to have to clearly keep an eye on. I mean, look at how fast that came in and went, right? Like we're here, we get a headline about Signature Bank, we get, Silicon Valley Bank, one or two others, and then we're not talking about it anymore. It can't just be within that realm there. So when I look at financials, I kind of peel one or two of the bigger guys out of there, and then I look at financials as a whole, and I think that's where we might have some risk moving forward.
Now, I'll put it on a percentage basis. What do you think about recession? What percentage would you give it? Probability.
We've been talking about this for a long time, right? There are pundits out there that say if we haven't hit a recession as of yet, we're not going to. I'm leaning more in towards that camp. I think with what you look at, what the activities, what the government has done, interest rates, I can go down the list. If we haven't gotten there yet, I don't think we're going to get there. I'm going to put it at a 20% chance that we hit a recession, if not lower. The Fed clearly holds on to all the bullets to manage that. So, and they've got plenty of ammunition behind them. I don't think, again, I'll get back to what I said before. We're getting into an election cycle. What political candidate on either side is going to want our country to be in a recession during the election cycle? Either they're going to use it to their advantage to say, well, look what's happened and I'm going to fix this, or they're going to win and get in and step into a situation that's going to be really hairy to get out to. So I think from a full headline cycle, it's not a chance that we get there.
Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, at Jonathan Corpina. I'm going to still say Twitter. Thanks for joining us, Jonathan. It's been a long time. We're super glad to have you back, and we'll be dialing you up again real soon.
Gentlemen, thank you. Always a pleasure. Have a great day today.
All right. Like always, let's take a peek into the markets. How we looking, Joel?
We're still rallying. We still got to rally. Brian,
TLT still moving?
TLT, yeah.
Holding up.
Yep,
Holding up.
TLT.
That's the rally. So I've been trying to buy stocks all morning for that simple reason. I came in actually short IWM, and I was like, I'm covering that thing, because if TLT is going to be up this much, IWM is eventually going to play a catch-up trade here.
Yep.
So you just see the opportunities. Like, people think, oh, high-frequency traders have it all whipped. They don't have it whipped. They're not even programmed for half of this stuff. So they have market making whipped. They have, basic, arbitrage whipped, some of the stat arb stuff, but they miss so many things. So many opportunities for a savvy trader to just profit from. And this morning, when you come in, I'm like looking at stocks trading red and the TLT trading up $2, and you think like, well, I don't think stocks are going to stay down. I mean, that's why we sold off yesterday. So you're telling me we're not going to rally when the TLT gets all of its losses back? So, and again, you're staying away from the Magnificent Seven because they haven't kind of been moving opposite the overall market, but got to be thinking like, yeah, I think there's, that opportunity for some of these beaten down names to have a relief rally as long as the TLT holds its gains.
Don't you think there's programmers right now listening to the show and like putting all the input in here?
And by the time they get it all back tested and all put in there, it really should be the other way. I'll make money from them that way too.
Turning to
again, AI maybe changes it all, Joel. Maybe that comes into the stock market and puts me out of business too. But automation in the markets,
you got to be behind
not put
AI.
Good traders out of business. You look at Twitter, like your Christian Fromhertz's, your Jeremy Newsom's, the people who we bring on this show. Like, we look through, our guest list, and we know who does what. Kenny Glick kills it, man. Like, he finds his opportunities here. So there are good traders out there. And, these couldn't exist if, everybody just thought automation just is taking over the market.
Dennis, you got to remember, though, remember right now, it's not true AI. We're training the AIs. So if anything, you and I could train the AIs to learn relationships right now.
I don't want them to learn, because then then Skynet's going to come kill Dennis Dick and Mitch Hoch and take over the whole world. We're trying to fight Skynet.
Yeah, should we let them in, right? I mean, that's the question. There's a reason why they're collecting data right now, right? That's really what these AIs are doing.
Yeah, we're banning all the bots from the show.
If you're a bot,
bots, you're not allowed to listen anymore.
If you're a bot and you're trying to program, will you please put a 1 in the chat if you're a bot in your program?
Bot.
If you're a bot, put a 1. If you're not a bot, just stay put. So if you're a bot, you got to put a 1 in the chat right now. Then we can see all the bots.
Turn into the controversial
Shane's a
Shane's a
bot.
bot, yeah,
Pete Bryan's
yeah.
a bot. Steady's a bot. Sean, Easy, Walter, Ivan, Shane. Again, the Crow, Jeff, ATFE, Juan's a bot. Easy, Mike's a bot. Elon's not a bot. Unbelievable. Elon's not a bot. Toronto
Will,
Dave.
you're outta
Toronto
here.
Dave's a bot? I can't believe it.
You're
He's
outta
been on
here.
this show for years. Man, these bots.
What's
Joe's
Mike?
Jay's a bot. Michael's a bot. Xavier's a bot. Holy mackerel. Alt Styles is a bot. Joel, we should have did this years ago here.
This is the
We're
better
gonna have
question.
nobody left in the chat. So okay, we're boarding. We can't ban the bots because the only people who listen to the show are apparently bots.
Maximus said the real question: am I the only human left?
Yeah, I think he might be. That's Maximus
wait till they
Decimus
start
Claudius.
asking us that question. At least the bots, at least. All right, turning to the biotech sector, cassava scientists working on an experimental Alzheimer's drug called Simufilm is faced with allegations now of misconduct involving longtime contributor weighing that this came from an investigation of the City University of New York. They're raising concerns about the integrity of the research supporting it. And so you guys can see it. This is really affecting them. This is why I talk about it all the time. This is the number one sector that I stay away in investments. I just feel like this is an easy way to ruin portfolios. That's what I would say, because the truth is, you never know when these headline risks and these tape bombs are going to come.
And you're investing in smaller, biotech companies on a direct basis, you have this risk. Sometimes they work out and the trials go well and then they kill it. And then sometimes the trials don't go well and they get killed. I mean, that's the way it is. XBI is a way to play it diversified, but we know lending and capital is an issue for smaller biotech companies, why the XBI is making new 5-year lows or wherever it is. Sava has bounced off the lows.
I
here,
know,
Joel.
I know.
I mean, look at the short-term chart. Joel will go grab it for you here. We were down last night to under $8. So maybe that was an overshoot. It's back up to 13 here now. So it has bounced from those after-hours lows when it looked like it was going a straight line to zero. Bouncing up here now. So you come and you see it down 25%, like, oh my gosh, this is a terrible day for my Sava shares. Lucky you didn't look at it last night when it was $8.
Yeah,
I
what
know.
helped it, of course, is they released a statement saying that they're, at least from the company, they said that there's no findings of data manipulation. So that kind of gave them a little bit of a boost. But
we're the only group that can look at the stock down 25%.
Say it's
For them. I was like, man, this thing is strong. Look at this thing. What a great looking chart.
that's up 48% from the bottom.
I know. I would just I'll go one number here, and that it just your rebound high, 1370. So anybody that picked it up on the scoop, they're just like, I'm just getting out. I'm just getting 1370. Just get me out. So I don't know how big of a player is, how many shares they have, but right now that is half-star resistance there at 1370. Yeah, the bottom of yesterday's range.
Throwing us a curveball.
17.34. S&P's
in all the
going.
years I've known you, and I used to enjoy when I tell this story often. When I entered the Bright Trading office in Detroit in May of 1999, I looked down on my desk and I had this sheet, and it was full of the S&P components and a bunch of stars. And I'm like, what is this? And I'm like, the next day was the same thing, the S&P components and a bunch of stars. And Joel would print that out for our 20 traders in the office every single day. All the stars, and like levels of resistance on the S&P, and not just not the component, but it was the S&P futures. And you have this resistance is a 5-star level, a 3-star level. And all those years I've known you, I've never seen you put a half-star level. So one day you'll have to teach me the half-star level.
Okay.
Let's get to a last downgrade that I wanted to kind of bring in here. Morgan Stanley downgrading JD.com to equal weight, lowering price target to 33. Earlier this week, China was talking about how they want to step up efforts to boost its computing power by more than a third in less than 3 years, of course, aimed at benefiting local suppliers and strengthening technology self-reliance. I think a lot of this, of course, trying to battle back the U.S. and cutting their technology efforts. So I think this is an interesting downgrade coming in here on JD.
Wow, what a fall from grace. The COVID stock of 2020 that just could not stop going up. It went from 25 to 45 to 65 to 85, going all the way up to $108 in the COVID bubble of all bubbles, which they'll look back in the history books and say that was the tech bubble part 2, and it really was 2020. Now you look back here and full trip gone. Gave it all back. I mean, is there an opportunity on JD.com here down in the 20s for you longer term investors? Maybe I'm going to put this on my list to take a look at the fundies a little bit further. I had trouble investing in China stocks though, but JD.com, man, it's come all the way back, full circle.
Yeah, I mean, we're looking traded down. Got hit yesterday, big time too. So down $1.17. You thinking maybe someone that got it on the short side yesterday maybe is looking to bring it in. I'm just gonna go China here. And it's funny, we shift our focus in the markets and obviously what's going on in the Middle East. We just don't talk about China anymore. It's like a
Should we
thing
be?
here.
I mean, we come
I
back
don't
down
know.
here. I don't know. Maybe there is an opportunity. Alibaba's down the low 80s again. Every time it gets the low 80s, it seems like it's a buying opportunity. Maybe you just got to play it simple. Like the channelingstocks.com, buy low, sell high, same stock again and again. Well, maybe it works on Baba.
Yeah, just overnight risk, right? I think that's what we all think about. When
We're
we
all
think about
waiting for the
China names.
invasion.
Well,
as
at
wars
least
start. It's like
not waiting, but
he's sitting there.
scared.
Oh, there's
I would
wars
say
all over in the Middle East. There's wars here, wars there. They won't even notice me going into Taiwan and taking over.
I'll tell you what.
Well, I don't know about that.
I don't think I'm waiting. I would definitely have some fear on that moment because that could be the start of, what could be World War III. I mean, I don't want to get to that point.
No.
That we already have enough.
Musk
unrest.
says it's imminent. He said it was imminent in that interview 6 months ago. He says one does not have to read between the lines. One can simply read the lines. He basically said eventually one day they're going into Taiwan and it ain't going to be pretty.
Dennis, I want to bring you back to what you brought up at the very beginning because it was a very important point. What's driving the bus today? What are you seeing, Dennis?
TLT oil. But they're driving the bus in different directions. So there's going to be like a crash here, like between the two of them happening here. So oil stocks rip roaring higher, which should be bad for stocks. But TLT rip roaring higher, which should be good for stocks. So stocks are at odds. We're down earlier. Now we've rallied up. I think we're in store for a lot of chop. Banks are having a pretty decent day, holding on to the gains. Again, see the separation. Certain stocks are going to do better when the TLT is rallying. You're seeing a lot of the mega cap tech stocks not participating much. QQQ barely up here. IWM, which I was predicting earlier, which would probably start to rally, has indeed happened. It is now up 0.5% on the day. I covered my short because I came in short IWM there today. I covered it at 71.80 and 71.70. So just because the TLT was higher, wish I should have just loaded up long side on that puppy.
Flip it, Dennis.
I didn't flip it. I just got out of the short. At least I
You
kept
did
some of my
flip.
longs though, because I came in short today. I'm actually long, but I should have flipped and bought all that IWM. So I kept my
ain't trading. You ain't
I
fading,
kept all my
baby.
staples longs. I feel like the staples should rally.
Okay. So I started at the top of the show and I said, sometimes the market has a propensity to close on the highs or lows for the week. And I said, I didn't think that was going to happen today. Well, we're only 40 handles off that high from yesterday, or 35 handles. So, I don't know. It would catch a big bid here. We are strong into the pre-market. I just got to give you a number ahead of the intraday high and ahead of yesterday's high, and that's going to be the high close for the week, and that's 4409.75. Let's call it 4410. I think it would be really maybe not necessarily making a new high for the week, but make a new closing high for the week, considering all the circumstances, everything that's gone on since we started the show on Monday morning with the SPOOs down and the world caving in. So. And I wanted to ask Jonathan that too. Like, if you were told, like, if they put you in a time capsule and they brought you out and they said, war in Ukraine, Middle East unrest, higher CPI, higher PPI, where do you think the higher oil? Where do you think the market is? Oh, 4,400. I would, it just, to me, it's a real head scratcher, but
it's not a head scratcher. It's the Magnificent Seven, folks. Because when you look at the IWM, you get a completely different picture. The IWM is off a cool 172, 244 is the high. What are we down? 30% from the all-time high on the IWM. Is that about right, Money Mitch? Is my air math correct here? I'm not as good as the air math with Joel, but that's 70 points on 240. That looks to me approximately. So this broad market really is down 30% from the all-time high still, 30%. So, I mean, when you take out, you look at, what stocks are doing, it's not been pretty unless you're in the Magnificent Seven. And even tech, you can say, oh yeah, well, I'm in tech, I'm okay. Magnificent Seven, you're okay.
What tech.
Ask Kathy how she's doing into her tech stocks. 160 to $38. Woo! Oh.
Can I ask you, Dennis, a non-market related question?
Mitch, is this going to pass? Well,
I don't know, Joel. We're going to pass 9 a.m.
What
You
is
might
it?
get us.
What is it?
Will the Red Wings make the playoffs?
We don't talk hockey on this show ever again after the Wednesday night debacle. So I am leaving saying nothing about hockey. I've taken hockey and throwing it out the window and not looking at it ever again because my team got killed to the Vancouver Canucks. I'm not even thinking about it. It bothers me every minute of the day. When your hockey team, when your team loses, Joel, when Michigan gets blown out by, let's say, Michigan gets blown out by Ohio. Does that not bother you every minute of waking day? Doesn't it?
For a year.
For a year. Sports, man. Don't get your kid hooked on watching sports because they're in for a life of misery. Only one team can win every year. There's like 32 teams in every major league here. Your odds are so low, so that means 31 out of 32 teams are going home pissed off. Getting hooked on sports is just a way to just be miserable your whole life.
Might as well play the lottery.
It's so easy. Like you look at other people, like I have friends that, I don't watch sports. I'm like, why didn't I think of that? I should just not watch sports too because, I can't help it. I'm hooked on this crap. My wife says, why do you watch if you're going to get pissed off? I'm like,
yeah, my wife says the same
I'm
thing.
addicted. It's like, it's my crack. I'm addicted to sports. I can't help but watch.
Why do you watch it if you get mad?
At least the Lions are trying for us, Joel. That's been a lifetime of misery. So anyways, we don't talk hockey on this show.
Sorry about that. Hey, listen, I'm gonna hop here. I just wanna tell you that Craig Johnson coming on the show on Monday over there at Piper Sandler. He's gonna give us his outlook on the market for the rest of the year. So really fun show today. Great job today, and not only today but this week. So signing out. And if you guys want to hear from Anne Marie Band, she's going to be joining me on the closing print at 3:30. So everyone have a good day.
I need to listen in because Anne-Marie always calms me down.
Yeah, we might need it at the end of today.
Calming voice.
You guys have a great one.
Anne-Marie's talking. Breathe. Yes. Thank you, Anne-Marie. We love you, Anne-Marie.
We'll stop. Go get after it, Dennis. Go do what you do best, my friend. Have some fun. All right, Dennis getting into his trading action. I'm going to bring you guys over to live trading. That's coming up next. And it's a special day, guys, because normally we would be going towards our quarterly, but we wanted to do something special. We wanted to keep the show going for you guys. We didn't want to cut you guys off from some trading action, especially on a day with all the bank earnings coming in. So if you guys want to come check out some trading action, stick right here. You don't got to go anywhere. We have a great community that supports you, talks about all the top movers out there. Charts all the time being mentioned in the chat. What's moving? You don't want to miss what's moving. Come hang out with us on live trading. We're starting up in just about a couple seconds. Don't miss me. I'll see you guys over there.